What are Reliance Retail results telling us? India's consumer product sector growth is slowing down. While this is impacting the overall basket, how is retail doing, and could Reliance Retail's results provide any clues? So, Reliance Retail's net profit in October to December rose about 10%, that's the third quarter, to about 3,485 crores over the same quarter in the previous year, while its earnings before interest, tax, depreciation, and amortization, or EBITDA, from operations increased about 10% to 6,600 crores. Now, the company's revenue from operations at about 79,000, close to 80,000 crores, was up 7% year on year, while gross revenue increased about 9% to about 90,000 crores. So the company has said that it saw strong sequential growth thanks to several factors, including productivity and festive sales. Reliance Retail has also done some amount of rationalizing of stores. It said that it saw a footfall of about 296 million across formats and opened about 779 stores in the quarter, taking its total to 19,102 stores. Digital and new commerce and these channels now contribute about 18% of revenue. The fashion and lifestyle business and apparel and footwear apparently saw a strong bounce back thanks to new designs and improved store experience. I reached out to Karan Taurani, consumer analyst and senior vice president at Elara Securities, and I began by asking him to decode these results for us and what the larger signals, if any, that he was seeing in the retail segment.
So retail overall as a sector, I think is under some kind of stress. Now it's a mixed bag. There are certain categories like the fast fashion segment, which are reporting strong growth in excess of 35%. There are certain categories like FMCG, which are probably reporting muted growth, right? Because what has happened is that you have seen a transition towards quick commerce, and more than 70 to 80% of the sales or the order volume on the quick commerce side is from FMCG. Beauty personal care as well is a mixed bag. It has seen very good adoption on quick commerce platforms, e-commerce platforms, and online. And maybe that is why the traditional segment within that is also struggling. So one has to understand the fact that even today, as we speak, all these categories are very heavily dependent within the traditional businesses. So whether it be it BPC or FMCG or apparel or any category, close to 70-80% of the revenue does come from the offline channel. Apparel, I think, has a higher online share, but broadly, if you look at the other categories, 70 to 80%, comes from the traditional channel. And digital channels seeing adoption because of better customer experience, because of quick commerce, because of customers becoming impulsive in terms of purchases, and so much of competitive intensity within so many platforms. There are super apps, there are niche apps which are there. So clearly, if digital has to grow at a faster clip, it has to grow at the cost of traditional businesses, traditional segment rather. So if you look at the modern trade business, or if you look at the general mall store, kirana store, or any other general trade business, those are the businesses which are seeing muted growth. And that is where Reliance is also coming, and that's where other companies also play. So whichever offline businesses are there, they are seeing muted growth at the cost of digital adoption.
So, how does one interpret a 9% year on year growth in this case, particularly given what sales or numbers would have been in previous years?
So I think if for Reliance, I think the base is extremely large. They are one of the conglomerates as far as retail segment is concerned. And 7% growth on a YY basis is a reasonably good, healthy number. Because last year too, if you look at the base in the festive season, it was not that compelling because there were not too many weddings. And I think this time around the festive season, we have seen more weddings as compared to what you would have seen last year. So that has led to this fillip. Second thing which has led to some kind of fillip, for the growth in this quarter has been the base as well. So if you look at it on a quarter-on-quarter basis, you are talking of 20% quarter-on-quarter growth, which is extremely strong, which did not happen last year as well, as far as growth is concerned. But, this is coming at the cost of low base again, because if you look at Reliance Retail's performance in last year festive, in the earlier quarters, they had reported growth on a Q-on-Q basis. But this year, if you look at Q1, Q2 performance, and even Q4 for that matter, the base has kind of softened, and you've seen a decline anyway in the range of 4 to 5% on an average on a Q-on-Q basis. So there are two factors to articulate here in terms of the boost in growth. One is, of course, the weddings, and second, of course, is the soft base.
Right. So the company is saying they have about 19,100 physical stores right now, with some additions in the last quarter as well. So how does this compare with their earlier portfolio of stores?
If you look at their stores, I think they've been adding stores at a very healthy pace. I think where they are right now in terms of overall retail space or in terms of the overall square feet present, they are on the verge of rationalization right now. If you look at their overall retail space, it was around 73 million square feet last year, which is now at about 77, 78 million on a YY basis. There is growth here. But if you look at this on a sequential performance, or rather over the last 2 to 3 quarters, we are seeing a trend wherein you are seeing a decline in terms of the overall square feet space. Now, this could be because of two reasons. One is, of course, the new stores that are opening up, maybe smaller in terms of size. Second, very big factor is that you are seeing rationalization in certain categories. So, as I mentioned, FMCG, BPC, these are certain categories which are seeing very healthy adoption towards digital, led by e-commerce and quick commerce. And this space is going to intensify from here on, because if e-commerce companies come into quick commerce, if they're able to deliver within 10 minutes, competitive intensity will grow towards quick commerce, and you will find more adoption towards the digital channel. So very clearly, I think they are right now in a mode of consolidation. You may see another 2 or 3 quarters wherein there could be a decline in terms of this overall space and decline in terms of number of stores as well.
Right. And what would online be as a proportion in the current revenue or the total revenue mix right now?
So for Reliance, I think given the kind of size and scale that they operate in the retail segment, around 18 to 19% of their business today is digital and new commerce. And within that, they are also trying to do many different things. For example, if you look at GeoMart, has been into the e-commerce side more for the FMCG segment. They are also venturing into a lower lead time. They are trying to get into quick commerce in a different manner, rather, wherein you'll have the pickup of the products from the stores rather than having dark stores where how quick commerce operates today. So I think they are making inroads. They are doing this entire innovation. They also don't want to miss the bus in terms of digital adoption, in terms of digital growth. But this number has to really scale up, because this number has been stable over the last 3 to 4 quarters. So this number has to go towards 30%, beyond 30%, if we were to see that Reliance is doing well on digital as well. And I think it's going to be all about lead time, user experience, assortment, localization. These are the moat which is going to drive the quick commerce engine in India today.
I don't know whether we have the insight into what margins are, but what is the difference in, let's say, profitability between the digital side and the physical side right now?
So we would not have the breakup of the digital and the physical margins for now, but as we all know that digital businesses are making losses. So if you look at the likes of platforms like Ajio, Myntra on the fashion side, the other quick commerce businesses, the other e-commerce businesses, most large platforms are making losses. And the reason is very clear. Why are they making losses? Because I think on the apparel side, majorly there's a lot of discounting push which is happening. You need to give customers a lot of discount for them to kind of shop online, get used to shopping online, drive more frequency of the customers, and also spend on promotions, marketing to acquire customer as well. So I think the online businesses are currently loss making in nature, and that's what would be the one for Reliance Retail as well for now, because none of the platforms are making profits. But yes, I think there is one respite for online businesses today, which is the digital advertising revenue. I think ad revenue is going to be a very big lever for all these platforms to drive some kind of profitability. If you look at any of these e-commerce companies, anywhere close to 3 to 5% of their GMV is ad revenue. So ad revenue is a very big lever to drive overall profitability or reach a break-even part.
Right. And when you say ad revenue, this is the money they earn for advertisements they display on their platforms, as opposed to advertising elsewhere for consumers to buy.
Yes, absolutely. So if you look at all these platforms today, they have got a reasonable customer base. And as we all know, as a thumb rule, ad dollars follows traffic, customer traffic. So because they have a reasonable customer base, because they have a customer base which is high frequent nature in terms of shopping experiences, and they've got a reasonable amount of assortment as well, that is where typically the advertisers are interested and they want to kind of monetize that customer base on their platforms.
Right. And last question, how are you seeing, what is all of this telling you in terms of overall retail demand and consumption right now at a macro level?
Yeah, so overall retail demand has been mixed. If you look at the QSR companies as well, which are a part of the F&B retail segment, even over there, they have reported a decline in SHG, or they're rather going to report decline in SHG for this quarter in the festive season. The festive has not been that great. Apparel companies also, if you look at the fast fashion segment, that's the only segment which is reporting strong growth of more than 30%, but that's primarily because it's a very small share of the overall apparel industry. But if you look at the industry as a whole, there are no big positive surprises as far as growth is concerned. There are no big levers for margin improvement from here on. So things, I think, are mixed on ground. And I think over the near term, they will remain to be how they are. We don't see any sharp acceleration as far as demand is concerned, at least for now.
Right, Karan, pleasure speaking to you. Thank you so much for joining me.
Thank you so much, Govind. Pleasure as always.